J'ouvre maintenant la séance.
I call this meeting to order. Happy Monday to everyone. Welcome to meeting number 45 of the Standing Committee on Industry. Pursuant to Standing Order 182 and the motion adopted by the committee on Monday, September 26th, the committee is studying the current state of blockchain technology in Canada. Today's meeting is taking place in hybrid format pursuant to the House Order of June 23rd, 2022.
We have as witnesses from ChainSafe Systems Inc. Aidan Hyman, Chief Operating Officer by video conference. Nice to see you, Mr. Hyman. We have from Ether Capital, Brian Mosoff, who's Chief Executive Officer and President of Canadian Web3 of the Canadian Web3 Council. We have from Wealth Simple, Ivan Thomas, Head of Legal at Wealth Simple Crypto. And finally, from WonderFi Technologies Inc., we have Adam Gerritsen, who's General Counsel and Chief Legal Officer. So welcome to all of you. Thanks for taking the time to address this committee. We're looking forward to hear your 5-minute testimonies, followed by a discussion with MPs. So without further ado, we'll start with Mr. Hyman from ChainSafe. The floor is yours.
Thank you very much, everyone. It's an honor to be here today. And to be able to speak to you all about blockchain technology here at Canada. Good afternoon. My name is Aidan. I'm one of the co-founders and CEO at ChainSafe Systems. And ChainSafe was founded here in Toronto to provide open source developer tools that accelerate Web3 adoption. We've become one of the world's top blockchain research and development firms and now have over 120 team members across the world. To understand the full potential of blockchain in the context of the Canadian economy, let's start from the beginning and talk about Ethereum, the second largest blockchain. Ethereum is a favorite of developers because of its potential applications, these smart contracts that automatically execute when conditions are met. Toronto is one of the major homes of the Ethereum project, with almost half of the Ethereum co-founders being Canadian, most notably being Vitalik Buterin, the leading founder of Ethereum. We've seen many great Canadian companies and projects being sprung out of the vision and idea that is Web3. And there have been some amazing conferences in Canada that bring people from all over the world here to learn, connect, and collaborate on the technology that is changing the world. Ethereum has also experienced tremendous growth, with a 2021 report by Electric Capital verifying that there are over 18,000 full-time developers dedicated to blockchain tech, with over 34,000 new contributors in the same time. Many of you may or may not have heard about FTX and what has happened in the last few weeks. Understandably, there is a lot of talk about crypto and regulation, which has been happening for a while, but has been heightened because of this incident, with many taking a negative stance about crypto and blockchain technology altogether. This is a pretty harmful stance to take because frauds have been around since the beginning of time. It is also critical to separate the technology from bad actors. Fraud is illegal, no matter how it happens or what technology is used to commit it. Second, it is also important to understand the difference between cryptocurrencies and blockchain. Cryptocurrencies like Bitcoin are digital currencies that are verified using blockchain technology to record and secure every transaction. A cryptocurrency can be used as a digital form of cash to pay for everyday items, as well as larger purchases like cars and homes. Blockchain, on the other hand, is a set of digital records that is duplicated across a network of participating computers. Blockchain technology can power new models for change, advancing humanity and helping social organizations create impact. An example of this is the World Food Program, which deployed cutting-edge blockchain technology in a refugee camp in Jordan to allow for quick and easy transactions by Syrian refugees to purchase food and supplies. This technology can make sure humanitarian aid is not misappropriated and food security is improved for those in vulnerable situations. Canada is well situated to be a leader in the blockchain space, not just because Ethereum was founded here, but because we do have the talent and resources to make this a reality. It may be hard to see right now, but it is definitely possible. We see this all the time. It's hard to see the full extent and use cases for technology early in its history. Some of you may have heard of Snow Devil, which was an online snowboard shop that 2 years later led to the birth of Shopify. The now 16-year-old company has created countless jobs for Canadians. I mentioned Ethereum earlier and the potential of the technology. It has the potential to create hundreds of thousands of jobs in Canada. Let's together make Canada the #1 leader in blockchain. We have emerged as a leading crypto nation based on innovation, low energy costs, high internet speeds, and favorable regulatory regimes. While it ranks third in the world behind the US and the UK when it comes to embracing blockchain technology, the Ethereum blockchain technology adoption around the world with a wide variety of applications in finance, government, legal, health, education, space, national, and multinational cryptocurrencies, energy, and others are unparalleled. Canada has fallen behind other jurisdictions like the US and Europe when it comes to digital asset policies. It is really important to think about meaningful regulation, which creates regulatory clarity and clear standards so that businesses can flourish in Canada. It is an opportunity of a generation to have access to net new industry, and we can have it right here in Canada. This is the future. Let's build it together. Thank you very much for listening to my testimony today, and I very much look forward to hearing any questions that might come up. Thank you.
Thank you very much. We'll now move to Mr. Mosaf from Ether Capital.
Thank you. Bonjour and hello, everyone. My name is Brian Mossoff. I am the CEO of Ether Capital, a Toronto-based publicly listed company focused on Ethereum infrastructure and ecosystem. I'm also the president of the Canadian Web3 Council, an education group that's really here actually to service folks like yourselves on understanding the technology and the potential for Canada, thoughtful regulation. I've also been an advisor to the Ontario Securities Commission and IROC and have helped Purpose Investments, a related entity to Ether Capital, put together the world's first Bitcoin and Ethereum ETFs. So I would actually say that we've done some things very well as a country that we've led. Other countries did not come first to the ETF market. We did that in Canada. So in terms of structured products, I think we've done incredible. I've been around the industry for about a decade now, and I've watched it grow from a small asset, which was basically just Bitcoin back in 2012 or 2013 when I first started following the space. And the entire industry was worth just a few $100 million, which at the time seemed quite large. But by today's standards, where the tokens themselves, and there are hundreds or thousands of tokens or cryptocurrencies, are based on the price, which fluctuates, of course, nearing $1 trillion of total market cap. The industry has grown into hundreds of businesses and new verticals. And so we're no longer just talking about an industry that's just a few players and a few $100 million. We're talking about some of the world's leading venture capital firms allocating billions of dollars over the coming years, over the previous number of years, into this industry. I think many technologists, people like myself, view this as the future, as society moves from a world based on specific jurisdictions, assets in certain jurisdictions, to a more internet-friendly global population. You have communication tools like Twitter that are disrupting local media. And now we have digital currencies that are perhaps challenging central banking policy. The assets, no question, are volatile. I'm not saying that today people will replace the way that they pay their rent with something like Bitcoin or Ether, but I think that there's a societal shift as we move to a more digital economy to embrace these technologies. And I think that it's important that Canada recognizes this as an opportunity. It's no question going to be volatile. It's going to be a scary time, as the world that we know today will not look the same in 10 years. One thing that I think a fair bit about is that cryptocurrencies get tangled up with blockchain and things that are making the headlines or the volatility price of these assets. And when I think about the future of Canada's economy, when I imagine how our dollars are going to move to something that is more digital, whether we call that a central bank digital currency or a stable coin that's regulated in a certain way, I think that we can't design, and that we shouldn't design, and that it would be dangerous to imagine building that technology or those dollars without recognizing that a global financial system is being created here in an alternate universe. And that is happening largely around these digital currencies. The opportunity to program the money, to have developers build more transparent tools, ways of trading or interacting with these assets outside of kind of siloed black box institutions is very important. And I think that that's actually an opportunity for Canada to get this right and to ensure that we remain relevant, that people still have a desire for our currencies. So that's something I'm very passionate about. I also think if we want to think, what is at the heart of Bitcoin, or what is the heart of Ethereum? Why are we so excited about this? Why do you have a number of members in the industry on this call right now? It's that we see that these assets are more than just a single token with a price. And specifically Ethereum, I think of as a global settlement layer for all sorts of activities. And in the early days, perhaps it was just people trading or moving Ether back and forth between accounts. But over time, we've seen verticals emerge that have grown into their own industries. They may have started in a petri dish worth just a few small amount of dollars, but we ended up with NFTs, the ability to have a piece of art tokenized on a blockchain, whether it's a digitally native piece of art or someone who's trying to take a painting and tokenize that asset to be swapped or fractionalized. We have the metaverse. And then we have something called stable coins. Stable coins are tokenized dollars. Most of them that exist in this industry are tokenized US dollars. And it used to be only a few $billion, and now we have hundreds of billions of dollars moving around these ecosystems. And the way I think about Ethereum is you have this global settlement layer for all sorts of activities, all sorts of assets. And some of them, over time, we're going to have this spectrum of things that may not make sense to us today or many in this room. It's hard to imagine maybe why an NFT or a digital piece of art holds value, or why the metaverse is something exciting. But then you have something like stable coins and businesses like Visa coming along and saying that maybe this is a better form of settlement between their data centers. And so we'll have this spectrum of activities taking place, being cleared on this single layer, which is Ethereum. And it could be something that's not Ethereum, but today it does seem that that is what is emerging to be the leading platform. And so I think that this is really exciting. There's no question that the recent news around FTX is unfortunate for retail investors, for companies or businesses or pension funds who had invested in that leading platform. This was a platform that existed outside of Canada, outside of the US, although there technically was a US registration. And to, as Mr. Hyman was saying, recognize or separate that fraud is fraud, and that's different from the industry. And that there's, in a way, there's no regulation that will pass that if someone on the inside at the C-suite level wants to be nefarious and go out of their way to hide certain activities that they're doing, we can't prevent that. And so we're here today to lend our time, as much of it as needed, whether it's today or people reaching out to us via email, to help educate, to help figure out what the opportunities are for Canada and how we move this industry forward, and to recognize that despite the price of today, the industry is not going to go away. And we need to be thoughtful about policy and how to move this forward so that we are well positioned over the next 5 years or decade to play a meaningful role in this technology. Thank you.
Thank you very much. We'll move to Mr. Thomas from Wealthsimple.
Good morning. Thank you. My name is Evan Thomas. I am the head of legal for Wealthsimple's crypto trading platform. And I thank the committee for inviting me today. I hope today to help the committee better understand the Canadian crypto trading industry. Now, about Wealthsimple, we are a Canadian financial services company. We offer various financial tools, including managed investing and do-it-yourself stock trading, in addition to crypto trading. We serve over 3 million Canadians across all of our products, and we employ over 1,000 people. We have a head office in Toronto, but being remote first, we have employees across all 10 provinces. And we have over 30 employees who work exclusively on crypto trading, but many, many other employees support our crypto trading platform among our various other products. To offer crypto trading, we have mobile and web applications that make it simple for Canadians to buy, sell, stake, deposit, and withdraw crypto assets that exist on different blockchains. Our clients can keep their crypto with us, and we hold it on their behalf like a traditional investment, or they can withdraw it to a blockchain wallet under their control. Now, regarding our crypto clients, 77% are under the age of 40. But I emphasize these are not young people betting their life savings on crypto. The average crypto account value on our platform is about $1,600. And 3/4 of our clients have invested less than $1,000 in crypto. You see, most crypto clients see crypto as part of their overall investment portfolio. 4 out of 5 also have accounts with us for do-it-yourself stock trading or managed investing. I highlight, however, that we view blockchain and Web3 as more than simply an investment opportunity. We believe strongly that they will have expanding applications, and our goal is to make this exciting technology more accessible to Canadians. Now, regarding the broader Canadian crypto trading industry, a recent Ontario Securities Commission survey found that 12% of adult Canadians currently own crypto assets. That is about 3.75 million Canadians. And a recent Bank of Canada paper has very similar numbers. And it found that the number of Canadian Bitcoin owners nearly tripled between 2020 and 2021. On the platform side, that is the platforms that buy and sell crypto, there are about 11 Canadian-based crypto trading platforms, including ours. Most serve Canadians primarily, if not exclusively. There are also some companies that buy and sell crypto, but don't hold it for clients. An example would be operators of Bitcoin teller machines. Now, there are also foreign platforms that serve many countries, including Canada. And there are at least 15 of those platforms that are in the Canadian market. In fact, 3 out of the 4 trading platforms most used by Canadians are headquartered outside of Canada. Now, Canada is a global leader in the regulation of crypto trading platforms like ours. Platforms that hold crypto for clients must register with Canadian securities regulators and comply with specific requirements. For example, we must keep 80%, at least 80%, of our clients' crypto assets with regulated and insured crypto custodians. We do ongoing due diligence on every crypto asset that we list. We create and we update risk disclosures for every asset, and we hold our clients' crypto assets in trust. We do not lend out or use our clients' property ever. We are also registered with FINTRAC, Canada's financial intelligence agency, and we have built a robust anti-money laundering and sanctions compliance program. Now, this regulatory framework has evolved primarily in response to the 2019 failure of a Canadian crypto exchange called Quadriga CX. As a result, Canada is further ahead than most jurisdictions when it comes to the regulation of crypto trading, which brings me to the failures of FTX and other crypto business that my colleagues have mentioned. In each case, there were failures of governance, of compliance, of risk management, and in some cases, failures of ethics and honesty. These risks and failures, I emphasize, are organizational, not technological. That is, these businesses failed because of how they ran their business, not because of blockchain or crypto. And the regulations that we have in Canada are very rightly directed at preventing these organizational risks and failures. Now, while there is a strong regulatory foundation in Canada, it is a work in progress. For example, as of today, no foreign platform has registered under the Canadian Securities Regulatory Framework. Meanwhile, 9 out of 11 Canadian platforms have. This highlights the need for clear and consistently applied regulations for crypto trading platforms that serve Canadians, whether based inside or outside of Canada. This requires effective coordination between agencies, federal and provincial governments. And there are many areas where Parliament can play a role with respect to payments, asset custody, insurance, taxation, even bankruptcy laws. Wealthsimple and I are grateful for the opportunity to assist the committee today. I'm now available to answer your questions. Thank you.
Thank you very much, Mr. Thomas. And finally, we'll move to Mr. Garrettson from WonderFi Technologies. The floor is yours.
Thank you, and good morning. I'd like to thank the committee for undertaking the study, as well as for inviting me to comment in the context. My name is Adam Garrettson, and I am General Counsel and Chief Legal Officer of WonderFi Technologies, Inc. WonderFi is a publicly traded TSX-listed company. We employ over 85 people in Canada. We have over $250 million in client digital assets under management and over 6.5 billion traded in digital assets over our platform to date. WonderFi primarily allows our users to participate in the buying and selling of digital assets that are based on blockchain technology. WonderFi owns and operates two crypto asset trading platforms, or CTPs, that are registered with the securities administrators, namely BitBuy Technologies Inc. and Coinberry Limited. So a little bit more about myself. I have previously served as Director and Senior Counsel at RBC Capital Markets, where my focus was on investment banking and global market trading. And I've also practiced securities law in the Toronto offices of Blake, Castles and Graydon for a number of years prior to that. I have previously served as a committee member of the Canadian Bankers Association Securities Legislation Specialist Group, and I am very honored and happy to be here speaking to you all today. In my view, it is highly unlikely that digitization is slowing down or going away in the future. I strongly believe that digital assets are here to stay and will, over time, replace a wide variety of traditional assets. And related thereto, blockchain technology will replace legacy infrastructure. I've often heard blockchain be characterized as a solution looking for a problem. The technology certainly has a wide range of potential use cases and has found applicability and significant adoption in the financial services sector, where WonderFi and some of the other panelists here today participate. So I see blockchain as the infrastructure technology that has the potential to underlie a number of different use cases, including virtual currencies and other digital assets, the most prominent of which is Bitcoin. Regulation, to me, drives investor confidence. It backstops the development of a reliable infrastructure. And here in Canada, as you've heard already, we have the opportunity to be and continue to be a global leader if we get the regulation right. And we've seen this initially through the adoption of regulation over crypto assets by the Ontario Securities Commission and the other provincial securities commissions with respect to digital assets. And that's helped provide stability to the Canadian cryptocurrency trading sector through a recent period of heightened market volatility in the space. In short, we need a made-in-Canada solution for digital asset market infrastructure, and our company is diligently working on it. And related to that, industry partnership with legislators to ensure that the establishment of coherent regulation with respect to blockchain technology is paramount, primarily in ensuring user adoption of compliant and regulated products, which is, in my view, the best way to combat bad actors in the space. Effectively, that means we incentivize the use of compliant products through assurances provided by regulation. And while my focus on blockchain is in the context of financial services, in my view, it's important to take a broader, long-term view of the technology itself, as opposed to any one sector or asset. Overly burdensome approaches to regulation runs a significant risk of stifling Canadian innovation, such as by lumping low-risk applications of the technology in with more high-risk speculative activity, or inadvertently providing monopolies on the development to more traditional players that can afford costs associated with adhering to undue burdens. Inconsistent application of regulation can also be potentially problematic. Some existing laws may apply already and can be layered onto blockchain-related activity, whereas in other places, there may be legislative gaps. We should also look to what other regulators are doing around the world to achieve a measure of consistency. So I would encourage the committee to take an approach to regulation with respect to blockchain technology and digital assets layered on top of that, that leverages existing laws and provides modification to existing rules where necessary and not attempt to legislate via one fell swoop. That approach, in my view, is cumbersome and frankly unfit to keep pace with a more rapid evolution of the space in the technology. Pairing regulation with the industry comes a requisite for enforcement, primarily against non-compliant actors. And that would be particularly those who operate on an offshore and unregulated basis. So I'd also like to advocate for financial and human resources dedicated to enforcement in the space, including at the level of provincial securities regulators. I thank you for your time today, and I'm happy to expand on these and other topics through questions.
Merci beaucoup, Monsieur Garrett.
Thank you, Mr. Gerritsen. Without further ado, we'll continue with the questions with Mr. Perkins. You have 6 minutes.
Thank you, Mr. Chair, and thank you, witnesses, for appearing today on this very important topic. Maybe I'd start with Mr. Gerritsen, and for everyone else. In the dark ages in the 90s, I spent some time on Bay Street, so in a highly regulated financial services industry, both in the regulated banking business, but also in the asset-based finance industry. And, we've had, and some of the witnesses here today have mentioned this, we've had people with ethical challenge since the beginning of time, looking to make a buck and take advantage of, the people that Barnum singled out in his famous saying. We had Enron, publicly traded company. People chose to commit fraud quarter after quarter in that company. Obviously, everybody is familiar with Bre-X and the Ponzi scheme of Mr. Madoff and many others. So this is sort of nothing new. What we've got is a new platform that people are coping with, and we're in the early stages of regulation. Can you, maybe start with Mr. Gerritsen, tell me exactly what is the state of the current regulation? You're referring to the fact, and some of the other witnesses have, that are publicly traded. Obviously, there are securities laws for the publicly traded companies, but some, I believe, like Wealthsimple, are privately held by primarily an institutional or a majority shareholder, which I think is Power Financial. Can you tell me how the Canadian system is set up currently to regulate crypto, Bitcoin tokens, and that new industry?
Yes, thank you for the question. I'm happy to respond to that. So to start off the bat, as you had mentioned, WonderFi Technologies is a public company, and that is so we're subject to the same laws, rules, and requirements of any other traditional publicly traded TSX listed company, including displaying audited financial statements, quarterly, annual, etc. So we have continuous disclosure obligations as a company. More specifically, with respect to the crypto and digital asset space, as I was saying in my opening remarks, WonderFi owns and operates 2 crypto asset trading platforms, and that is a term of art at this point. So what that effectively means is our company owns and operates 2 restricted dealers as defined under traditional securities laws set out by the securities administrators across the country. And so those entities need to be registered across the country in every jurisdiction in which we choose to operate. And we're primarily governed by legislation set out in securities laws, including National Instrument 31-103. So what does that really mean? It means that we need to be registered with FINTRAC as a money services business. We need to maintain bonding insurance requirements that are set out by statute. We need to maintain working capital requirements. We need to have a chief compliance officer and ultimate designate person that are registered individuals with the Securities Commission as well. We are not allowed to act on a discretionary basis on behalf of clients. We are not allowed to have margin or loans or leverage in our system. We have to set out a number of different policies and procedures with respect to our operating companies, including as it relates to conflict of interest. We have to do KYC and AML for our users. We have to establish that opening an account for our users to trade is appropriate for them. And again, appropriateness is a term of art. We also have to do trade-by-trade suitability. So essentially, we have thresholds for which clients can trade based on their level of vulnerability. We have to know our client. We have to know our product. And those standards have to be applied across our companies at various levels by persons who are individually registered with the securities administrators. So to wrap that all up, when you think of the traditional categories of traditional securities players, a restricted dealer is one of those categories, and we need to fit into that traditional box with some modifications for crypto assets specifically.
Thank you. And traditional lending institutions have to comply with Basel III and all the banking regulations around that internationally in terms of the capital that they have to keep on their balance sheet. and what they're allowed to lend. When an exchange receives payment for the purchase of a token, are there any restrictions or requirements on how much of that cash should be kept within an exchange's balance sheet, and what it is or is not allowed to do with the remaining money?
Definitely. So as I was saying slightly earlier, we are not allowed to offer margin or lending, and as an extension, we are not permitted to participate in fractional reserve banking from a traditional perspective. We hold all client assets one-to-one. We put out proof of reserve audits to show our users where the assets actually are. And related to that, under the modified crypto rules that layer on to the more traditional securities requirements, we are required to hold 80% of client assets in what's referred to as cold storage. Now, this is an industry term of art, and essentially a great way to think about it from my perspective is, a traditional commodity like gold will sit in a vault somewhere. And when gold's traded, it doesn't move in and out of the vault. You're trading contracts for the actual ownership, but in reality, it stays in storage. So what does that mean for the crypto industry? Well, the securities regulators require platforms like ours to hold 80% plus of our client assets in the vault, in cold storage at all times, and only take them out if we're going to be essentially moving them around. In practice, what that means for trading platforms like ours is 95+% of our assets typically remain in cold storage, with only a small portion of that 3 to 5% coming out to do daily transactions.
Thank you very much, Mr. Gerritsen. We'll now move to Mr. Dong for 6 minutes.
Thank you very much, Chair. And I want to thank the witnesses as well for coming today and give us a very informative, a look at the blockchain cryptocurrency situation here in Canada. My first couple of questions is for Mr. Hyman and Mr. Mossoff. To your knowledge, what industry right now uses blockchain technology? Start with Mr. Hyman.
Yeah, we're seeing widespread use of blockchain technology across a wide range of industries, with financial services probably being the largest kind of retail consumer of crypto and blockchains at the moment. But as I mentioned previously, the World Food Program has incorporated blockchain technology, as well as many other social good initiatives, as well as governmental initiatives all around the world. So where we're going to see the largest adoption in the next 10 years, and where Canada needs to be prepared for, is starting to think of these internet organizations, or companies as we refer to them kind of today, as distributed, co-owned pieces of software that live on the internet. And so the future of this space is way beyond industry effect, but also in how we view the fundamental technologies that make up the internet.
Okay.
And so the future of this space is really enabling individuals to create these autonomous organizations through a series of smart contracts that enable for functionality way beyond trading crypto. And that's the world we need to be prepared for, because quite frankly, it's already here.
Yeah, you mentioned about enabling individuals to adapt to this model. What kind of regulation that you think is required from the government of Canada to make sure, because we're dealing with individuals or corporations in the virtual space trading potentially large sum of commodity in the case of food you just mentioned? What kind of regulations do you think the government should be looking at?
I mean, as a few of my colleagues have mentioned, we do have pretty robust regulations in place right now to ensure that, for the use cases that are being seen day to day are above board. Where we need to really work together is to start to define what that looks like for this next wave of application that are going to start to take over the world. Just as when Facebook and all of these large networks launched, we had to reevaluate how they affect society and how we need to work together to ensure that they don't negatively affect regular people. We too need to come together to start to understand what is the individual implication, while also what is the corporate implication of these different things. We are a company.
Thank you. Thank you. I just want to give Mr. Mossoff a bit of time to, just continue on from that point. Sure. To your knowledge, in Canada, a structured sort of a policy framework that's looking at these regulations and what's required in the future?
If I can just take a step back, I think it's important to recognize that a lot of the activity that has taken place so far inside of these ecosystems has largely been what I'd call digitally native or blockchain native tech. So it's kind of this self-referential loop rather than it touching real world businesses or, out in the meat space, as people in tech would call it. But where we're crossing now is into this point where you're getting companies like Visa who are recognizing that tokenizing US dollars perhaps is a faster form of settlement than using the SWIFT network for wires, different ways of clearing checks. And so we're at this point where I mentioned before that there's a spectrum of activities that you have NFTs and DeFi and on-chain trading happening over here, but now you're seeing banks and financial institutions saying, should they be tokenizing equities, bonds, securities, and using this also as a form of settlement? I don't think it's clear yet how these two worlds are going to collide, but it seems like we're in the next 2 to 3 years going to start seeing all of this activity happening on something like Ethereum. I also would point out that it's important because I get this question a fair amount on what are the real world business cases? And even though it's not quite clear exactly how the technology will be used today, I liken it to the early internet, where if people were looking at how maybe the post office was going to offer electronic mail for people to come into a local service center and send something to someone in a different jurisdiction, that would validate the technology of the internet, when in fact, the biggest businesses turned out to be a library in something like Google, which didn't have that much value in terms of monetary value prior to the internet. Same with Amazon, Facebook, social networking. So it's really hard to imagine what will the biggest businesses be in this new world. They're probably things that are more digitally or blockchain native than something that we can mirror back to society today. In terms of regulation, I think where we're at now is we've done very well with structured products. As I mentioned, we have a few listed entities joining us. Today I'm one of them. We have ETFs that we brought to market, but retail investors may want a different access point. And so for people who are comfortable with the technology, who want to hold the asset direct inside of a centralized entity, a crypto trading platform, or in a self-hosted wallet, they're going to look for a way to purchase that asset. And where I think the next thing of what we need to do is figure out how do we give enough clarity to the local platforms.
Mr. Mossoff, I hate to cut you off because this is very interesting, but I want to ask you one very quick question. We did a study on quantum technology, and some would argue that it will be commercialized within 5 to 10 years. What kind of impact it will have on cryptocurrency or on blockchain technology if it does in fact arrive?
I'll give a short answer and then ask Mr. Hyman to chime in. But as far as I know, if quantum is able to break blockchain technology, it would force the space to move to new algorithms that would be quantum resistant, and some of that research has already begun. But more worrisome would be that the entire internet security would be broken today. Every banking system, every access layer and set of controls for pretty much every system that the government has, that end users have, that also would be broken. So it's a scary world to imagine, but something that is important to consider. Mr. Hyman, if you want to add anything to that.
And what should the government do, or the
maybe if I can jump in there. I can share an article that we just released on post-quantum consensus mechanisms, which really are kind of the place of fear within the blockchain stack, and how we as a community aim to solve these problems and already have solved these problems. And so I would venture to say that this isn't really an issue and that it's already solved. And I'm I'll make sure that my team shares with your office the article in which we talk about how we achieve this type of what we call post-quantum cryptographic guarantees.
Thank you, Chair.
Thank you very much.
you.
Yes, please, Mr. Hyman, if you can send it to the clerk of the committee. I think members would be interested in learning more about this. So, je passerai maintenant la parole.
I'll now give the floor to Mr. Trudel for 6 minutes. Thank you, Mr. Chair. Thank you to all the witnesses. What we're hearing this morning is extremely interesting. There's still a lot to learn and things we need to shed some light on. Mr. Mossif, you've mentioned in the press that cryptocurrency is not the Wild West that we need to tame, that organizations need to, regulatory bodies need to collaborate with industry, and that there's a lot of sorting out to do there. Can you tell us what is necessary to modernize the regulatory framework for these businesses?
Well, thank you for the question. I think many joining us today would talk about we have a fragmented securities regulatory environment. I think it's important to understand that retail investors, I'm going to talk about them specifically for a moment, don't think of things as commodities or securities. They don't bucket the world that way. We might in this room, lawyers may, accountants may, but retail investors are seeking either for an access point to purchase an asset or participate in an activity that they think may be very important, perhaps that there's a financial gain to, and they don't think about what platforms are regulated. Perhaps there's going to be more of a light shone on that now post a FTX world. But generally what this means is if a local platform is not able to compete with one in a foreign jurisdiction that has less oversight and can offer more products and services that are keeping up with industry trends, that retail investor will seek out the foreign platform regardless of if there's a local registration or not. Something that I'm very passionate about would be to figure out a way to allow the local businesses that are trying to be compliant, that want to be registered, that are trying to keep up with the industry. How do they offer those same products and services? If we can build a framework that allows them to keep pace, I think we won't have retail investor assets move into foreign jurisdictions. So that I think is the biggest help that we need from government to have a national framework, a national strategy on how we see this technology playing out from a retail asset exposure level, but also how it's going to, as a technology, touch society. I'd ask Mr. Thomas if he has anything else he'd like to add to that.
Thank you. One thing I would add, and specifically within what the federal government can do to protect Canadians in this area. As Mr. Gerritsen and I mentioned, crypto trading platforms like ours must keep our clients' crypto assets with custodians. These custodians are themselves regulated entities. They are trust companies or banks. They have to have sufficient capital, and they have to have these procedures for keeping crypto assets secure. In Canada, regulation of those sorts of entities would fall under OSFI or provincial trust regulators. And at present, there's actually only one custodian in all of Canada that meets the requirements under Canadian securities laws. And then there are other custodians that have the technology, but do not yet have the regulatory piece. That is, they're not trust companies or banks. One opportunity at the federal level is for greater openness to developing the crypto asset custody market within Canada. It's a matter that would be overseen by OSFI at the federal level. And actually last week, OSFI did announce that it plans to study this area in the coming years. And related to that would also be the area of insurance. Platforms like ourselves are required to have insurance for crypto assets, and there's increasingly a demand for insurance for crypto asset businesses. Again, to my knowledge, are no Canadian insurance companies that will underwrite insurance in this area. But there is a significant demand both within Canada and globally for this type of insurance coverage. And again, both custody and insurance are important elements of protecting Canadian investors.
Merci, Thank you, gentlemen. Earlier, you said that in some countries, cryptocurrency has starting to arrive, and what are they doing with regulation? You talked about the United States and the UK that are major players in this field and that they have regulation there. Can we learn from them? Is their regulation more developed, more advanced? Is that something that we can take inspiration for the Canadian market? Mr. Mossif.
If the question is directed to me, I can add a couple of comments on that. The United States, in some respects, is more developed, in some respects, less developed. The United States does not have a consistent national framework for the regulation of crypto trading platforms, like what we have in Canada. At the same time, for example, the state of New York has a regulatory framework for crypto businesses and crypto custodians, and the largest custodians in the world are predominantly located in New York. For example, the experience of New York may be instructive to the committee in terms of considering different modes of regulation, particularly with respect to crypto asset custody. In Europe, the EU has recently introduced a framework for regulation called MiCA, but it is yet to be implemented. And the United Kingdom has been doing, I would say, more research and more forward-looking work, and has not yet introduced legislation to my knowledge. So again, Canada is ahead in many respects. There are opportunities to learn, and I would New York and the EU might be instructive models for the committee's consideration.
How much time do I have left, Mr. Chair? 12 seconds. Okay. Thank you.
Merci, Monsieur Trudel. Je passerai maintenant la...
Thank you, Mr. Trudel. Now the floor goes to Mr. Massey for 6 minutes.
Thank you, Mr. Chair, and thank you to our witnesses for being here. It's a general question to start off. I come from a manufacturing base where we make things that are tangible, real. Aside from being a speculative asset, in terms of cryptocurrency and trading, what practical things do you actually create for the economy, or is it entirely just based upon shifting of the numbers?
I'm happy to address that. One of the things I mentioned during my speech was, the World Food Program is leveraging blockchain technology to ensure that people are fed, and this appropriation of funds cannot happen. This is a prime example of how blockchain technology can be used for a lot more than just shifting numbers, and that, yes, things are sent to a place, but then to utilize that tech when you are going to a food hall or something of that nature, there's a physical link there beyond just accounting in the back end, where we again see an incredible shift in how we view internet products, and how blockchain will influence that is really the data that underpins all of these massively popular social networks. With a reimagining of how these new applications can be reformed, owning your own data is going to be crucial to seeing how we can grow beyond the Facebooks and the Instagrams of today. And so it's incredibly important to look at this tech as really the spine or the kind of plumbing that will inevitably lead to a more user-owned internet. Now, is that very obvious right now? Unless you're inside of it, it might be hard, but hopefully after today, you'll all be on board with that vision of what we can do here in Canada for Web3.
I appreciate that. I guess what I'm concerned about is what is the 3 to 5% that's out there? You mentioned about having to keep 80 to 95% in cold storage. So what is the other money doing, and where is it moving around, and what physically is it actually affecting the economy? You did mention, of course, the food aid, but again, that's the currency didn't create that in terms of the product. It was shifted around. But what is the other percentages doing physically in the economy?
right now? Or is it just basically another version of the stock market at the end of the day, which is, some critics would argue the stock market is quite similar to a casino. It moves numbers around and so forth, but it actually doesn't produce anything. So what is the 3 to 5% that's out there and doing on a daily basis that affects people's lives?
Sure, maybe I can jump in. I think this tails to some of my previous comments. So I think conceptually, a good way to consider it is to think about the underlying blockchain technology and then use cases that can be built on top of it, right? So for traditional industry, you may want to use blockchain to replace your additional system of books and records, for example, right? It's safer, it's more secure, and you can, replace traditional infrastructure with blockchain. And excuse me, one of the use cases that gets built on top of blockchain that primarily impacts the financial services sector is rapid movement of funds and currency. So you can do things like instantaneous settlement between counterparties, not have to have money sitting overnight in a financial services system. Therefore, you reduce the risk of counterparty credit failures and failed trades and money movements and things like that. So another use case that's been built on top is essentially equivalent to an exchange, a marketplace, a stock market for the trading of digital assets. So one of the comments I was making a bit earlier is to consider the technology along that particular spectrum and to identify areas for regulation that are responsive to the risk profiles, right? So private companies using private blockchains that only people at the company can access to store your books and records and share with the auditors probably doesn't need a ton of regulatory oversight. You probably don't care what system of records companies are using today anyway. On the marketplace side, that jurisdiction has primarily fallen to the Ontario and Canadian securities regulators to apply more traditional securities laws on top, again, with some additional gap legislation for those types of products. Now, in the middle, you've got a bit of a spectrum, right? And we're not entirely positive what use cases are going to rise to the top, which ones are going to fall, et cetera. But one area that at a federal level you can see is, again, the lending type products. So those don't traditionally fall within the purview of securities regulators. Those are more banking type legislation. My colleague, Mr. Thomas, was talking about insurance coverage and trust law again. So you're starting to see financial services cases that are more at the federal level. To respond a bit more to the 3 to 5%, and I may throw it back to Mr. Hyman a little bit from more of a technological or Mr. Mossoff potentially, but when you think about the exchange traded business, the 3 to 5% is actually what's moving on exchange or between users at any given time at any particular moment, for example, right?
And what's that doing for the economy, like in terms of that 3 to 5%? Like aside from speculative worth of the value of that trade, I'm just wondering what it actually physically does for the economy. It might be an oversimplified version, but I guess I'm trying to distinguish this process in our financial systems, and like we have money marts, all kinds of different stuff like that payday lenders that are just basically a drag on the economy. It's about borrowing and getting percentages off of people. Doesn't really produce anything other than just the access to capital and insurance of making sure that those assets are going to be paid later on at a higher dividend at 20-25%. That's what I'm trying to figure out, is where's the real value for people with what that's being done during the day.
Understood. I think one of my colleagues may be better positioned to answer that. Mr. Mossoff, I was thinking if the committee might.
And I believe we're almost out of.
Yes, exactly. Great.
I know you're bumped up against time, but the short answer is that long term, we believe that there's going to be very important activity that takes place on these open networks. And the question is going to be, who owns the tokens that verify and validate and secure all of that activity and transactions? And so you are 100% right that right now we are in a very speculative part of this cycle. And it's people betting that the size of that economy and that activity is in the many trillions of dollars, and owning those underpinning tokens and the ability to offer security out to those networks is potentially very valuable. So that's where we're at in the journey.
Maybe just to step in there really quickly, my organization does take part in speculation. We are a technology company that builds open source developer tools that empower people to build things like the people on this call today might be using our open source developer tools under the hood. I definitely would, and I will share this with the rest of the committee, would love to point you to things like Gitcoin, which are enabling hundreds of millions of dollars in funding to public common goods, all on the Ethereum blockchain. I'll point you to different regenerative technologies built on top of Ethereum, which are directly contributing to, creating a better world, regenerating our planet. Right. And so there's some incredible use cases that we're seeing today built on top of Ethereum that absolutely do a lot more than just pure speculation. And I would go so far as to say I wouldn't be here speaking to you today if speculation was the end all be all for this space. When we joined this journey, it was specifically to restructure the fundamentals of the internet. And most of the people in the early days, that was really their intention. It was never about, how do we make it easier to speculate on the stock market? Now, obviously, the financial tooling and the infrastructure that comes along with this tech is fundamentally applicable throughout industry, which speaks to some of the use cases that my colleagues mentioned with respect to quicker settlement, immediate settlement, and trusted settlement through a property of trustlessness and not needing to trust centralized intermediaries when participating in speculation, if that is what you want to do.
Mr.
Do we have 30?
Mr. Mosaf, I'm sorry. This was a very interesting discussion. I kind of lost control of time. But we'll have to end it there and move to Mr. Williams for 5 minutes.
Thank you, Mr. Chair. And thank you to the witnesses. I'm going to continue. This discussion is very important. I want to start maybe top level. So we'll start at the top, and we'll just start with whoever can answer these. But let's start with, what is blockchain worth to Canada right now? We talk about its potential, but what is the industry worth? Jobs, GDP. Can anyone answer that for us right to start?
This is going to be fairly speculative because I think it's very hard to quantify. But I would say that if you imagined Ethereum as a business that was created, it would be one of the largest that Canada has ever seen. The total value of that platform is many hundreds of billions of dollars. At its peak, I suppose it was around $500 billion. And that was born here in Toronto. And most of those key developers have left our jurisdiction to go to other places because they thought it would be easier to build there and create the opportunities beyond just creating the initial foundation of Ethereum. They would do that in the US, they would do that in Europe, they would do it anywhere that would welcome that activity. In terms of number of jobs, I can't speak to that. If anyone else wants to jump in here.
Yeah, absolutely. In a 2021 report by Electric Capital, it was said that there are just under 20,000 full-time blockchain developers, with an additional 34,000 blockchain developers that are contributing in a part-time basis. Now, you're looking at those numbers, it's also important to appreciate that these are not traditional paying jobs. These are incredibly well-paying jobs with incredible benefits. And the more that we can do, as Mr. Mosaf was alluding to, from a regulatory standpoint, to ensure that more businesses can be based here in Canada, I think that will lead to a newfound resurgence in all of those developers now choosing to come home. I mean, not all of them, not all 20,000 are Canadians that left Canada. Sorry, didn't want to.
I would also just add to that when I think about the next generation, the people who are 15 or 20 years old today, they're inspired to work in this industry. They see a design canvas that is so wide and a lot of interesting intellectual problems that need to be solved. How do you do on-chain insurance? How do you have file storage that exists on one of these networks? They look at the internet as something that is going to be recreated with this technology underpinning it. And so even though today I recognize that it's murky, they see the opportunity to build the next Googles and the next Amazons, and it's inside of this world. They're not going into traditional financial institutions. Of course, some people will, but I think it's important to recognize that to that group, to that cohort, the idea of more digitally native money, money perhaps that's created by an algorithm rather than a central bank in their jurisdiction, is going to be something that resonates with them. And that's who is going to make up this economy in the next 5 or 10 years.
And do all of you see this as, I think it's neat that it's called Web 3. It seems to be similar to maybe what would happen in '93 or the late '80s, early '90s with the internet. Is this similar? This is just sort of the next iteration that we're seeing. Our technology's developed so much that seems to be where this is going next.
Yeah, I would add. I'll just go quick. I'd add 2 points to this. The first is, a lot of people will bucket the iteration of the web into 3 buckets. The first is Web 1, which was basically read only. You're connecting direct to someone else's information, you're reading it, that's it. In Web 2, you have this rent extraction model where the emergence of these big centralized players, and you have read and write. And so social networking becomes a thing, file storage up in the cloud, becomes possible. And I would say that most people on this call, whether they're, in favor of blockchain, they're skeptical of blockchain, they don't like that world where we've trusted these big corporate entities to house all of our data, and we hope that they do it in a secure way, that they won't rent extract in the background, using that information for advertising or in ways that we don't approve. And the movement towards Web 3 is, can we move back to a decentralized web that's more secure, where that end user is more in control of their data? As I was mentioning earlier, when I think about Ethereum, it's that tech layer that underpins all of this activity. And that's the reason why so many people want to speculate or purchase those tokens today, is because they believe that that world is coming, and that those new verticals, file storage, social networking, that will emerge, and it will need this global layer of truth. It's not going to be a corporation or a central authority that underpins that activity and runs a database and says, you can do this, you can't. That one layer of truth is shaping up to be Ethereum. The last point I'd quickly make is, I think of this like the 21st century invention of the mechanical clock, that in the 14th century, when the mechanical clock is emerging, could have been 13th century, can't remember. But the point is, you couldn't coordinate economic activity prior to this, let's say anything less than 1 hour. Maybe it was a half day. And when you had this mechanical clock and you could coordinate activity down to 15 minutes or down to 1 minute, the amount of economic unlock that came from that was enormous. And what we're seeing now is the tech layer, the internet layer, where you can coordinate a layer of truth of information, as people were saying, for settlement, to replace things, let's say, like the DTCC, or how stocks are traded outside of that world, commodities, tokenized real estate. If that can happen on one layer of truth in a very efficient way, that to me is the 21st century invention of the mechanical clock. And that's why a lot of people are really excited, because they see that that world is coming, and that this technology is not going to be built by a corporation or a government. It's going to be built in an open source way that the entire world can plug into.
Interesting. Mr. Chair, speaking of clocks, I'm out of time. Thank you, sir.
Thank you, Mr. Williams. We will now move to Mr. Erskine Smith for 5 minutes.
Thanks, Joel. I want to start with bracketing blockchain from crypto for the moment, because Brian, your comments around the value of smart contracts, the value, the economic activity that can be facilitated by blockchain, I think is unquestionably true. We studied Estonia's KSI blockchain and digital ID in the last parliament, and there's a huge economic value and savings in that regard. And Aidan, you've mentioned the value of blockchain in relation to tracking international aid. There's obviously unquestionably value of blockchain in tracking food supply chains and supply chains more broadly, right? But I guess the question around crypto, currencies in particular, is what value they are providing over and above, what value are they providing to society, that as against the volatility risk that we've seen with Terra, that we've, and even if you want to bracket off FTX from this to say that's pure and outright fraud, although they were making claims around, FDIC protection that they didn't actually have a number of months ago, and so there's still concerns as between, in the protection on a consumer basis. But all that's to say, let's bracket these conversations apart, focus specifically on cryptocurrencies. What's the value that they are providing that isn't provided elsewhere, as against the risk that is being created for consumers?
I would start by saying that you have to ask the question of what is the definition of a blockchain? And this is perhaps a little a hotly debated topic. My view is that a blockchain is a trust coordination mechanism, meaning if you have two counterparties that do trust one another, you probably don't need a blockchain. You could use a database, MySQL, MongoDB, these are all excellent tools. You didn't really need a blockchain. A blockchain comes into play. Again, this is my view, and some people may disagree with this. You need a blockchain when you have counterparties that don't trust one another. And the question is, what is the commodity or the asset being put at risk to being a good actor? And so in Bitcoin, you have electricity and computing hardware being put at risk, and the token that is rewarding them for their activity of being honest and secure good actors is Bitcoin. It's a token that's native to that system. In Ethereum, now that there's been a transition away from computing hardware and electricity, and people are moving that commodity from being external to the network to one that's internal, which is Ether, the native token of Ethereum. And so the reason why people want to buy those tokens is that they believe that these open blockchains, these databases that you don't have to have counterparty risk, you don't have to trust anyone else, are going to be very valuable tools. And so they are purchasing those.
Pause. Because so take a token like Helium, right, which I understand to be contributing to. There's an incentive to add value to providing some of your network, contributing your network, and then there's value to having the token to then use the network, and then they are able to create a public good, a clearly real world public good. But if you're saying we're just creating these tokens in the hope that they get trusted down the road and there's going to be value, like in what world does that make sense?
Well, I can't speak to Helium, and I would ask someone else to jump in if they know that system. But again, if you look at why Ethereum was created different than Bitcoin, is it's trying to build a settlement layer for any asset or any activity. And those assets can be real-world tokenized dollars, real-world tokenized real estate, or crypto-native activity like on-chain trading, which are self-referential to its own ecosystem, or it's NFTs in the metaverse. The question is what underpins that system, and there you need a token. Does someone want to jump in on Helium?
Yeah, if I could just speak to one of the points Mr. Mosaf made earlier. I might not be 15 years old, but I missed the previous internet boom, and was born into this world that really owned me. Right, everything on the internet owns everything I put onto the internet. So people like myself trying to recreate kind of these systems in decentralized ways, right? Taking away the power of the centralized actors is why these cryptocurrencies are necessary. It is
understand, but pause there, Aiden, because then with that decentralization comes no central protection, and what you end up with a case like Terra is people losing their shirts. And so how do we have that decentralized model, that vision that you've got, while making sure that people don't lose their shirts?
Absolutely. And unfortunately, the reality is a lot of people in blockchain knew that Terra wasn't a legitimate alternative to something like MakerDAO, for instance, which is another decentralized stablecoin.
Because Evan, I could, if people knew, I could go on Wealthsimple, or Adam, I could go on your crypto platforms, and I could have bought Terra, presumably. And yet Aiden's telling me that people knew that it wasn't legitimate. So I mean
it was. I didn't say it wasn't legit. It wasn't as
come on, though.
backed as something else. So that's why
if I could just chime in here
and educate people and work together like we're doing today, and have more of these committees, because the issue is that we weren't talking. The issue is we weren't making our voices heard. And so what we need now is to honestly work together to create the regulation that empowers people to participate in this new internet without taking their opportunity from participating, right? And so we need to work together in ways that we never have before to ensure that things like Terra are caught ahead of time, that things like FTX are caught ahead of time.
I agree. I'm out of time, so I would just say I think that's right insofar as we need to focus on regulation and protection. And if there's a way of matching that regulation protection with the vision of decentralization that you have is great. But the core thing is this: is how do we make sure we, as people who want to, as regulators, as legislators who want to protect the Canadian public, how do we make sure we are differentiating between tokens that are adding value to society and pump and dump schemes. Because at the end of the day, there are too many of those around, and people are going to lose their shirts.
Merci, Monsieur.
Thank you, Mr. Erskine-Smith. And to all of you, the floor is to Mr. Trudel. Thank you, Mr. Chair. I'm going to shift directions here. This has all been very interesting. The Quebec government, you know what? Let's talk about climate change. So the Quebec government has prioritized developing batteries for EVs, electric vehicles, and we know that collecting data on the internet is something that is very energy intensive. It takes a lot of energy to develop this. So do we have data on how the cryptocurrency and the traditional banking sector compare? Which one uses more energy than the other? I don't want to direct my question to anyone in particular, but whoever wants to answer.
Sure. Why don't I jump in, and I'll just say right off the bat that I don't have an answer for you today. I apologize, and I think one of the challenges with providing a true response to that question is with respect to disclosure. So, in numerous, and I analogize to the traditional securities world and publicly traded company disclosure requirement regimes as they exist and as they're evolving. So my understanding is that regulators, primarily in securities regulators, are working to enhance ESG related disclosures for public companies. And those laws, I understand, have yet to take effect and have yet to have meaningful impact. But I think that is an example of traditional legislation with respect to disclosure, whether it's around an individual asset or a market intermediary, that will be helpful for the space. We are emerging and developing, but I think of WonderFi as a public company, as and when there are ESG related requirements for disclosure for our company, we will be adhering to those and disclosing it to the world. And that will theoretically be the case with traditional financial institutions and hopefully the near term as well. And that will allow for a more meaningful comparator. I'm not as close to the ins and outs of the technology as some of my colleagues here on the panel, but I understand the industry is working quite hard to reduce its carbon footprint. But I don't have a true comparator across, but I believe that information is coming as the regulation develops.
If I can,
yeah, please.
If I can add to that, you've seen a shift in the two largest networks, which are Bitcoin and Ethereum, in Bitcoin mining, which uses electricity and computing hardware to validate the network. They're essentially arbing the cost of electricity, is a simple way of thinking about what they are doing. And so there's an incentive to co-locate that activity next to renewables using cleaner sources of energy. What the percentages of that network, I can't speak to at this time, but I know that they're incentivized just through economic forces to do so. Ethereum, the second largest digital asset by market cap, has transitioned away from proof of work to something called proof of stake and has reduced its energy footprint by over 99.9% because there's no more electricity and computing hardware, a commodity external to network, being put at risk, and instead it's the native token. So these things are moving towards greener solutions. Can they continue to get better? 100%. I also think it's important to think about every activity we do in society as something that consumes energy. When people say to me, don't you find some of these activities wasteful? I ask them if they believe in watering lawns for people to go on a golf course or turning on Christmas tree lights during the holiday time. Everything uses energy. The question is, do we think it's a good use of our energy? And the reason to be excited about these blockchains or the blockchain technology is that we think that a global settlement layer, a global financial system that's not run on corporate servers in a specific jurisdiction is something that is very valuable. And it's something that we can debate and people will have different opinions, but that's the way to frame this question to me is everything consumes energy. It's a question of, do we think that this is a good use of a limited resource that we have as a society?
I'll make sure that my team shares some data around energy consumption, specifically the move to proof of stake and what that's meant for energy consumption in blockchain networks, because we are with proof of stake now able to to say that we are using less energy than traditional financial services. And I'll make sure to share some of those reports with the committee.
Merci beaucoup.
Thank you very much. Do I have any time, Mr. Chair? No, of course. Thank you. Thank you, Mr. Trudel. I'd like to give the floor now to Mr. Massey.
Thank you, Mr. Chair. I have no further questions, so if Mr. Trudel wants some time or anyone else, it's good. It's a very interesting discussion, lots to take in.
Well, thank you, Mr. Massey. We'll move to Mr. Lubb then for 5 minutes.
Thanks very much, and it's great to see such a fantastic panel here today. My first question maybe is to Aidan or Brian, and I've spent a fair bit of time looking at this. I'm no expert, that's for sure, but I can think of one basic application. Brian Massey, I've known him for years, and we're good pals, and our office is on the same floor. Practical purpose, and I know as we sit here in Canada, we are some of the most luckiest people in the world. We don't have to worry about a lot, but there are people around the world that don't even have bank accounts. I think it's 2 billion people around the world that don't even have the ability to get a bank account. Brian or Aidan, could you comment on just the ability that this might have over the next number of years? People who are unbanked have the ability to have a bank and transact. Could you provide some comments on that?
Yeah, I would start by saying that the technology and ability to access, as I mentioned, this global financial layer is very important. And what we're watching right now is a bifurcation in our traditional financial system. We're seeing countries be cut off. We're seeing people's bank accounts being shut off. We're seeing businesses not able to get a bank account as anti-money laundering and know your customer rules continue to ramp up. And some of them are for very good cause and important. You're seeing it become more difficult to perform a lot of economic activity. The question is going to be, who has the right to approve that economic activity? Who has the right to give people a bank account? And the people who are outside of that system, who have been traditionally kind of left behind, where is their access going to be? I think that there's a fundamental question for Canada. Do we have a responsibility to people in other jurisdictions in the world to help them be part of financial inclusion? And I suppose you could argue this either way, but the reason that I'm so excited about Ethereum or Bitcoin or any of these layers is that I think as the world bifurcates further, countries get cut off from our economic activity, people are going to move towards something that is more open and inclusive than what we have. And so I think that a lot of the potential here is to give access to those people who are outside of the system. I think that we're still a ways away. The cost to transact on many of the big networks like Bitcoin and Ethereum may still price out people in developing countries, but it will get there over time.
And one of the things we can speak to as well is the development in wallet technology, specifically self-custody wallet technology, which, if we were having this conversation 5 years ago, the idea of having 2 billion people leveraging blockchain technology for their financial inclusion would be, a complicated and complex thing to discuss. But what we've seen over these last, say, 5 to 10 years is a huge influx of these self-custody wallets that leverage some really exciting cryptographic primitives to ensure that people do have the ability to recover while still having full self-custody. And so the technology is now at a place that it's never been before to enable those 2 billion people, as you mentioned, to now be included into this new world.
And I think about, and I wish I had a lot more time to ask questions here, but I think about one other real practical application is that our Canadian dollar, we may gripe about it from time to time, how it is against the pound or the American dollar or what have you, but it's fairly stable. Countries like Lebanon, Turkey, other countries like Argentina that have seen their currency crater against the US dollar and their wealth in a global perspective have seen it wiped out. And I also think about the French African colonies that work off the French franc, the 14 countries there. There's Nigeria is another one I can think of. This gives them an opportunity to own a digital currency that protects some of their wealth. Do you guys have any comments on that?
I would agree with that. Even though Bitcoin seems extremely volatile, and it is volatile, and it has been since inception, the question is, do people have a fundamental right to opt out of a monetary policy in their local jurisdiction? It's not something that I can say, 100% everyone should agree yes, 100% everyone should agree no. The fact is that's what these technologies enable. If someone was living in Argentina and holding the Argentinian peso when it was 1-to-1 to the US dollar, the government then converted their US dollars into pesos at a worse rate than the bank a number of years later. And now I haven't looked at the rate recently, but was something like 90 pesos to $1 US recently. Citizens in that jurisdiction 100% would benefit from being able to hold Bitcoin or a tokenized version of a US dollar or a Canadian dollar. And that's where I actually see the opportunity is, as I mentioned earlier, when we're thinking about CBDCs or the digitization of the Canadian dollar, is there an opportunity to leverage into this technology, to lean into it in a compliant way, in a way that's very collaborative with industry, and recognize that people are going to want to hold other national currencies in a way that they haven't maybe had access to before. US, as much as they may complain that the tokenized US dollars, the stable coins have been issued without oversight or in a compliant way, reality is US dollars have become the default quote currency in many of the decentralized finance applications. Hundreds of billions of dollars are now sitting in tokenized US dollars. And so I think the US can lean into that and try and encourage more countries to want to adopt their currency. And that's also an opportunity for Canada to figure out how do we push our currency into this tech and help other countries and strengthen the long-term ability for the Canadian dollar to remain relevant.
Quick question. Okay, yeah. And so just on the currency thing, it's not to replace, but it's maybe to protect some of your wealth through a US dollar coin or something. The last question I'd ask is, we're studying moonshots in our Science and Technology Committee, and I'm just wondering, Brian, you see a number of proposals come through your desk through ETH Capital. What are some amazing projects that are out there that could be complete game changers for the world?
I admittedly don't know what a moonshot is. I'm not sure if that's an application or an NFT. But I think, the technology today that's really exciting is figuring out how do you scale up these networks to allow transactions to take place at a fraction of a penny, and what type of economic activity can happen if that becomes a reality in a secure way. I can't speak to other blockchains. Helium was mentioned before. I'm not really sure what that is at a tech level, but I think that scalability and having the right to transfer something at a fraction of a penny anywhere instantaneously is something that is very important. At the same time, I think a lot of proposals are going to be developed in the coming years for financial institutions to figure out how they can leverage this technology and these open layers to digitize some of their current activities or use it for faster or more efficient settlement, while respecting that they're going to need privacy. So zero knowledge proofs is something that speaks to, can you transact in a way where a bank is not exposed to what that activity is to the open public, where people can't just see what it is, but they can prove verifiably that they have a certain set of reserves or that a certain trade did take place? That is developing very much in the background and going to be a big part of the next few years. Scalability and financial institutions leveraging the technology into a way that benefits their existing systems.
Thank you very much.
And sorry, I don't know what moonshots are.
We might have some more time towards the end, but I'll go now to Madame Lapointe for 5 minutes.
Merci. Thank you, Mr. Chair. I'll be sharing my time with my colleague,
Mr. Hyman, and I would like to shift away from cryptocurrency and explore other uses for blockchain technology. In your opening statement, you mentioned how blockchain technology can be a model for change, and you cited an example where a world food chain was created. And I know I've heard the Minister of Industry, Minister Champagne, say that when he meets with world leaders, food security is one of their top concerns. And so you've touched on it a few times now, but can you explain to us how blockchain technology can be used in fostering food security globally?
Absolutely. Looking at how we utilize centralized databases right now to ensure for accountability of things like food supplies is unfortunately in a position where anyone in a position of power can influence those numbers, while at the same time, we don't have assurances that when capital is sent, wherever it's sent across the world, that it's used specifically for the things we demand it be used for. And so with blockchain technology comes an auditability to know exactly what information lies where and who is able to manipulate that information, obviously not always in a negative way. And with that comes also, again, the ability to audit the financial trail as well in a way that any person can see for themselves exactly where each dollar is going.
Okay. And when we look at peer countries like the UK and Australia, where they've developed their government's policies and strategies around blockchain technology, would you suggest that there's some good lessons learned there for Canada?
I would say the greatest opportunity right now is to stand out, is to do so much more than anyone around us, right? So many people are waiting for someone to take lead. And as has been mentioned, we've seen some incredible adjacent legislation in Estonia with their ID system, their online IDs for their e-residency program. And that really blew everyone away, right? It was never really considered on such a global scale to see something like that. So I would actually say that the opportunity here is to stand out beyond our peer nations and to be that hotbed for incredible moonshot innovation that can come by fostering local initiatives to be based in Canada and not to leave.
Thank you.
Thank you to my colleague, and it's great to sitting in on the committee today as a replacement for one of my colleagues, but very interesting discussion. This question relates to risk exposure. I'm not sure who wants to take it, but do we have data on the number of Canadians who have crypto assets, not ones that would be regulated in Canada, but abroad? Is there any information on that?
I can assist the committee with that. I believe your question is getting at the number of Canadians who hold crypto assets, but do you mean with foreign platforms?
Correct, yes.
Yes. So the Ontario
and therefore
Securities
regulated in different countries.
Or perhaps not at all.
Or unregulated, that's right.
So the Ontario Securities Commission recently did a survey that's quite instructive in this regard. So it not only captured the number of Canadians who own crypto assets, and I believe I mentioned it in my opening statement, it's about 3.75 million, but 12% of Canadians. But the survey then goes down to break down the crypto trading platforms that are used by Canadians. And so it has percentages of Canadians, of the people who hold crypto assets, what percentage of them use which platform, and list them by name. And I noted in my opening statement that 3 out of the 4 crypto trading platforms most used by Canadians are actually foreign owned. So we could certainly provide the committee with a copy of that survey. It's published by the Ontario Securities Commission, which provides that in more detail, but that would give a sense of how many Canadians are using foreign platforms and holding their crypto assets abroad.
I'm not a member of the committee, Mr. Chair, but maybe the committee would benefit from that information. As I say, it's a question on risk exposure, and if Canadians hold crypto assets in environments that are either regulated to a small extent or not regulated at all, it's an important question that merits consideration. Thank you.
Thank you very much. So we'll now turn to Mr. Viss for 5 minutes.
Well, thank you, Mr. Chair, and thank you to all of the witnesses here today. I think this has been the most exciting meeting we've participated in since I joined this committee, and that's a huge compliment to you, the industry you're working in, and in some of the language used today, it's like the seismic shift that my children and many of the children of MPs around this table will invariably experience in their lifetime. Just to maybe a quick question to Mr. Mossoff and Mr. Thomas to start off, just so I'm aware. So in some of the testimony today, we heard about cold storage. Where's most of the, if I'm that young person under the age of 40 who has a couple $1,000s in Bitcoin or a coin issued through Ethereum, where's the cold storage today? Where is it physically located?
I'll let Mr. Thomas chime in, but as I mentioned, I don't believe that the young people today are likely buying structured products like Bitcoin or Ethereum ETFs. Those assets are being held in custody or cold storage with largely Gemini or Coinbase. These are two US highly regulated, highly respected entities. Gemini, for example, holds a BIT license in New York. They're a trust company. They're the gold standard of custody. But I don't think that most I don't want to say under 40, but people who want to engage in a self-hosted wallet are the people who are buying the assets through that avenue. I would assume that those individuals are either holding their assets on a crypto trading platform, and it's up to that individual crypto trading platform how they are doing the custody. And it could be very well that they're using Gemini or Coinbase on the back end. They perhaps are using a software-based wallet called Fireblocks for some of the custody. Or the individuals withdrawing that asset to a wallet that they are in control of. It can be software-based, it can be hardware-based, hardware being a little USB key that they plug into their computer. And I also would point out that it's not risk-free. A lot of people say that that is a solution. It just comes with a different set of responsibilities. So that end user would have to secure that wallet and have an appropriate backup to ensure that they don't lose their funds.
Okay, thank you. Some other stuff, just in summary of what we've heard today, and anyone can chime in on this. So this is the first study done by Parliament, I believe, on blockchain. Is that correct, Mr. Chair?
I can't speak to all other committees.
Yeah, but
I would
generally
think,
it's one of the first where we're actually looking at this, and I'm still trying to wrap my head around it, and today's testimony was instrumental in having a better understanding. What I heard was that we need a national strategy for retail investment. We need asset custody regulation, and we need better policies for insurance. As a committee, when we're drafting a report to Parliament and the Minister of Industry, what other key points that haven't been mentioned today need to be covered in any type of national framework that we begin looking at to get this right, to protect Canadians as they embark into this new new reality, as it was referred to in some cases today?
I would just add in one very small thing, which is that understanding that while we protect Canadians, while we set off on that journey, of course, in good spirit, it may mean blocking those same Canadians from participating in the cutting edge technology and opportunities or assets. They're kind of at two different ends of the spectrum. Striking the balance to me is the key, and not just leaning completely towards protection, because protection might just mean block them from essentially every asset and every activity that's at the cutting edge of this industry, saying they can buy some Bitcoin, they can buy some Ether, nothing else. And what that will lead to is no businesses, no jobs, and perhaps missing out on future assets that are valuable while protecting them.
Thank you, Mr. Mossoff. I have such limited time. Anyone else want to chime in on that point?
Very briefly, I would suggest adding taxation to your list. There are various issues relating to taxation of transactions of crypto assets that could bear from clarification to assist Canadians, and also to ensure that to the extent Canadians are using foreign platforms, that the revenues and profits that those platforms are generating from Canadians' activities are being appropriately taxed and received by Canada.
Okay. Anyone else on that point?
Related to that is enforcement of unregulated offshore platforms. So taxation is certainly one way, but other sanctions would be helpful as well to ensure that Canadians are using Canadian platforms.
Thank you so much.
But just if I could add to further Mr. Mossoff's point, there's, as he mentioned, a spectrum where the most innovative, the most kind of future-looking technologies are unstoppable, are centralized versions of some of the centralized kind of services that you're talking about regulating right now. And we need to ensure to empower Canadians to be leaders and not followers. And that means enabling them to engage in Web3 beyond, just access to as we're talking about regulating today.
Thank you. One very broad-based blue sky question. Maybe Mr. Mossoff is actually best to answer this. What I'm hearing today, it's tones of revolutionary language in the way we live our lives, the way we interact online. I think everyone would kind of agree with that consensus. Just in the geopolitical world that we're living in right now, a lot of people have Iran and China on their minds. Does it say, because this technology is so new and nascent, say in China with the state controls that they have on internet usage now, are Chinese citizens able to participate in the blockchain economy in a free way like Canadians can right now? Or has the state already intervened to stop that from taking place?
I believe that in China, many citizens are able to run VPNs and likely participate on-chain in various activities. What China can do, or any state or country, is regulate the on and the off ramps and essentially block their citizens from being able to exit or enter that economy with their local currency.
Does anyone else want to comment on the application of these technologies in totalitarian states?
I mean, what we're seeing from these states is absolutely a stance against blockchain tech and everything it stands for, because they do not believe in freedom. They do not believe in liberty. And quite frankly, they see this technology as stifling the ability for them to have that totalitarian control. And so what we are seeing, and I can add this to my list of things to share with the committee, we will definitely make sure to share how these totalitarian regimes are regulating blockchain tech and stopping progress, and in turn causing a brain drain that we have to avoid here in Canada.
Thank you all for your time today. This was really, really beneficial.
Thank you, Mr. Viss. I'll now turn to... Actually, before I do, I need unanimous consent for this committee to keep going until 1 p.m. Because the bells are ringing. Do I have unanimous consent? Great. So I'll now turn to Mr. Dung for 5 minutes.
Thank you very much, Chair. First thing, I think it was Brian mentioned that right now there are 3.7 million Canadians holding crypto asset. Is that right? Okay.
It was Mr. Thomas, but yes.
Oh, I'm sorry. and out of the 3.7 million Canadians, how many would you say that they are holding the asset as an investment, not as a tool that actually used for trading in the blockchain technology?
I do not have the numbers committed to memory, but I do recall that information, there is some information on that topic that is in the Ontario Securities Commission study that I referenced and undertook to provide to the committee. I'd also note that the Bank of Canada has done some studies in this area about not only who is holding Bitcoin, but also the purposes for which they're holding it. I would also be pleased to provide a copy of that study by the Bank of Canada to the committee.
Thank you. That's great. And I have to confess that, to this point, in my head, or observation, if you will, has a lot of contradicting elements to it, because there's a lot of uncertainty with this technology. We heard honorable members talk about in some countries that they don't even have bank accounts, whom that may benefit from this technology going forward. But in my head, I'm thinking, you need internet, you need some sort of digital platform to run these, and some basic understanding, so you have the confidence and trust in the system compared to the traditional, tool for trading, which is cash or foreign currency. So there's a lot of contradicting parts to what we were talking about today. But what I'm very concerned about is what you said about tokenizing, U.S. dollars. I say U.S. dollars because it is the currency of trade. U.S. Reserve has, enormous power in the last decades, and in terms of who gets to move what around the world. And decentralizing is going to stand up to that structure, for good or for bad. I don't know if Canada's going to benefit, or because we're so close to U.S., our economy is tied. I just want to collect your thoughts on this. First is, would this present opportunities for Canada, a medium power country, to be part of that conversation in the next frontier of determine what is the currency or what is the tool used in the trade, and ultimately, that kind of says the allocation of resource on the planet. And at the same time, what kind of challenge do you not think that large countries like China, United States will come up with their own public fund-backed currency to own this piece of the market share, to continue dominant on the decision on who gets what around the world? I'll get your thoughts on this.
This is a question that I'm extremely passionate about, and I think about it a fair bit. I 100% believe that there is an opportunity here to lean into this world. And the way that I think about this is, let's say right now, 98%, I'm just making up a number here, but let's say 98% of transactions that take place in Canada are denominated in Canadian dollars, and then 2% are in foreign currency, tap when they go to pay. The question that I ask a number of people is, in 10 or 15 years, as the next cohort becomes more comfortable holding their assets on a digital wallet, and it could just be Canadian dollars on an iPhone or a smartwatch. This is not a smartwatch, but pretend it was. The question is, when that group of people in 10 years from now grows up understanding NFTs or an in-game asset like a sword in a highly popular game, and those marketplaces become more connected, more fluid, higher velocity, lower friction, will they still be paying 98% of their transactions and denominating their net worth, the way that they think about their life, in Canadian dollars? If you think that that number potentially is lower, that it's 90% or 85%, what we're really talking about is Canadians over time having less and less interest in doing commerce denominated in Canadian dollars. Now, therein also lies the opportunity, though, because I believe that the frontier of crypto or digital assets is going to be who gets to be a dominant player in this new financial system and part of this big economic activity. And whoever leans in and designs those dollars.
I hate to interrupt you because I know it's a big question and it deserves a big answer. Could you write a paragraph? And because I really want to hear, to see actually what you have to say about this, because I want to give some time to my colleague, MP Erskine Smith, on this. And I just want to say one comment. I mean, in the beginning, the money wasn't there. It was created so there's trust embedded in this tool so people can trade. So are we going around the circle? And I expect an answer in your paragraph. Thanks. Nathaniel?
Sure.
Actually, Nate, if you don't mind, we're out of time for your round, Han, but it's been 5 minutes already. I know time flies, but we'll have time to come back to to Nate a little later. So, Monsieur Trudel.
Mr. Trudel, the interpreter would like, never mind. I'm going to change directions. Right now, we're experiencing a massive labor shortage in various fields. I was speaking to someone in construction region recently, and we want to build houses in Canada, and we can't even build them. So this is an issue in many industries. I assume it touches yours as well. I'm assuming that you recruit in the traditional banking industry that maybe work for you. I see that there must be a boom in your industry. Where are you recruiting? How do you deal with this? Is there an immigration component? Should we be thinking about this to make sure that we have the people with the specific skills that can work in this field? Or is everything fine and you have the staff you need within the pool of talent in Canada?
If I may, the working in this industry, building businesses in this industry requires employees with a range of expertise to operate a crypto trading platform. For example, we have engineers, we have designers, we have operational professionals, we have anti-money laundering specialists, other regulatory specialists. So we have to bring together all of their various talents in order to operate these businesses. So yes, it is a challenge. And the other challenge is that blockchain and Web3 and cryptocurrency, this is a global market. It's a global industry, and there is intense competition globally for individuals who have the talent the talent and the expertise to work in this area. So some of my colleagues have alluded to, there are Canadians who have left Canada to work elsewhere in this industry because it is truly a global industry, and the individuals within it are very mobile and can and will leave. At the same time, one thing I would note is the opportunities that it creates, the skills it require are it has very high value employment opportunities. But to your question, yeah, certainly it is a challenge, not just because of the general economic conditions referred to, but also the fact that we are competing with businesses around the world.
We can speak directly to, we have 120 colleagues in over 32 countries, and absolutely anything that the government of Canada can do to make it easier for high-skilled or really skilled workers to either come to Canada, be trained in Canada, and to be able to participate in these incredible organizations that are here in Canada would absolutely be appreciated by Canadian businesses. But first and foremost, I think we need to start at the education layer. My co-founders and I come from the Blockchain Education Network, which was a group of network of university groups that were in maybe 50 plus universities 7 years ago. And it is really initiatives like that help foster kind of the great skills that are necessary to participate in these real high skills opportunities.
If I could just layer on there quickly, I think the hope from my perspective on the employment side is that regulatory certainty over Canadian domiciled entities will foster confidence for employees working with companies in our space. You'll know who the regulators are, who the people are who are running the companies, that they have to be registered, that they have reporting oversight to. So the hope throughout, and one of the consistent themes, I think, and I hope is a takeaway from what you're hearing today, is regulation will drive confidence in a lot of different areas around digital assets and blockchain, including in the employment space. Thank you.
Merci beaucoup.
Thank you very much. Thank you, Mr. Trudel. The floor now goes to Mr. Perkins for 5 minutes.
And I agree with Mr. Viss. This has been a fascinating beginning to the study. And so my first questions for Mr. Hyman, and I'm going to go on to other issues other than the fraud, so don't worry. But the blockchain system in those cases is actually very instrumental, was it not, in proving that what we had going on here was fraud, since every transaction in and out of those funds was recorded and kept in the electronic ledger?
Absolutely. And what we saw further is that people on Twitter were the ones breaking the news for the world as to how that fraud was taking place.
Yes, I saw that. So again, the banks are always obviously worried about being, I don't know if they still call it this, but they used to call it disintermediated out of their business. This was a thing in the 90s where, mortgage brokers basically made mortgages a commodity, and they were looking at other areas where what they were offering was becoming a commodity, and they were losing their connection with the customer. And as they lost the connection with the customer, they lost the opportunity to sell them more products. And I don't know who's most appropriate to answer this. Maybe it's Mr. Gerritsen, since you worked at RBC at one time. What do you see as the evolution of the use of blockchain? Will it replace the traditional banks, or are they spending as much money as, say, the industry is trying to figure out how to fit into the future?
Sure. No, thank you for the question. My own personal view is that for legacy traditional financial institutions, their most likely path of exploration in this space is primarily on the nature of the blockchain technology itself and what legacy systems can be improved based on that. I would venture that anybody who's currently sitting in a position of market power or dominance, call it that, would be interested in ensuring that they're not disintermediated completely, but would be looking to, find ways where they can retain a sense of their current measure of control. So to answer the question a little bit more directly, I think the answer will be somewhere in the middle. I think right now we've got an opportunity for companies like ours and the members that you're seeing here on the panel to advocate for our positions and being a leader in the space at this time. And we have this opportunity both domestically and globally.
There was some discussion earlier about bank accounts and the challenge of bank accounts in other countries. We also have that here. If you do not have photo ID, acceptable government photo ID, you can't get a bank account in Canada. And there are low-income areas in this country and high immigrant populations in this country where they are yet not at the position to do that. So I would imagine this eventually would have some assistance in that way as well. And perhaps comment on that. But also, Mr. Thomas, you mentioned insurance. I've never known insurance companies not willing to find a way to sell insurance and make some money. And your parent company owns one of the biggest insurance companies in this country, Manulife. Is there any chat within the Power Financial Group of Manulife or anyone else looking at ways, or is the cost just too prohibitive at this stage for companies to buy it?
I can't speak to the internal discussions within Power, but the challenge with insurance, my perception from being in the market and seeking coverage for our business and otherwise in talking with other players. To a certain extent, the insurance companies themselves, they view it as a new category of risk. It's difficult then for them to underwrite the risk in terms of determining what the risks are and what the losses may be. I think there's also, they have regulatory concerns. They obviously, of course, are subject to, and I'm speaking generally, any insurance company answers to a regulator. And if they do not feel comfortable entering this new business line because they're unsure of where their regulator stands on it, then they're going to proceed with trepidation if they're going to proceed at all. But there is certainly demand for it, and not just from platforms in Canada, but really around the world as businesses that engage in crypto assets, they may require various types of insurance and are looking for it. So I am aware, as I mentioned, that the OSFI is looking at it, and I regard that as a very positive first step towards expanding the insurance marketplace for crypto in Canada. One thing I would highlight is in ensuring that these officials who have been looking at these issues, who are working on these issues, have the support and resources to do that, as they're doing very important work in terms of understanding the nature of the industry, the risks it may create, so that they can provide advice on how to improve the regulatory framework to create those opportunities. But I would highlight again that there is that opportunity, and not just within Canada but globally, because this is a market that remains very underserved at present.
If I could just add there, we do have instances of Canadian companies going to Bermuda for insurance because of the favorable offerings that are there. And absolutely, if Canadian insurance providers would offer these services, Canadian companies and potentially global players would look to Canada as a service provider.
Thank you very much. And at last, we'll now turn to Mr. Erskine Smith for 5 minutes.
Thanks very much. I just want to return to, in my last intervention, there was some conversation about this acknowledgement in the industry that some tokens and some companies are less legitimate than others. And Mr. Garretson, on the platforms, the crypto trading platforms that your company operates, is there any acknowledgement for consumers, any discernment for consumers and retail investors as to what would be credible and what wouldn't be credible in terms of the difference as between what apparently is common knowledge in the sector of what's legitimate and what's not?
Sure, I can help, excuse me, shed some light onto that. So just to give a bit of a scale perspective, if I had to guess off the back of the envelope, there may be a million different types of cryptocurrencies, assets that are created. Our platform at any given time will trade about 30 or 36 of them. One of the requirements we are subject to as a crypto trading platform is product due diligence. So we have to review the risk profile of the asset from a technology, operations, legal and regulatory perspective prior to making it available for trading on our platform. It's not perfect, obviously, but it is better protection than you can get in a lot of other places around the world by having market intermediaries that are held to those standards from securities regulators. Part of that is also disclosure.
When you say around the world, though, you're not comparing yourself to the Canadian framework.
I believe the Canadian framework is one of the strongest in the spaces globally at the moment.
So was Terra? I could before it went bust, I could purchase Terra on your platform.
Correct.
Luna? And so what's the due diligence there?
So the due diligence is on all of those factors. Like I said, it's not perfect, right? That is certainly one case in an instance, and that was a black mark on the industry at large for certain.
Okay, so pause for a second, because of the dozens of products that I'd be able to trade on your platforms, how many are adding a discernible value, a real world value today, versus how many of these tokens and coins are speculative investments, that people are trading them with the hope that others will perceive it to be more valuable and that it will trade up down the road and they'll profit as a result of that speculation?
I think there's a number of questions built in there, but the way I'd like to address it is from a marketplace perspective. And you'll hear a similar sentiment coming from regulators as well, is that we're not in the business of picking winners and losers. What we are seeing is that Canadians are interested in potentially picking winners and losers, investing in speculative assets. So what we are doing is,
despite the fact that there's no, so look, like there are penny stocks in this country, but there's an underlying business case to those penny stocks. That there's no, and they may be worthless in the end, right? But it's not to say we're not listing a venture that has no underlying, that is just to say this might be worth more. It's as what did SPF say? It's a box, and the more people put money in the box, the more other people see it as valuable, so the box has more value. I mean, that is something we ought to prevent from a retail investment perspective, no?
So I think one of the ways to look at that question is that disclosure is certainly very important when a new asset is created. What's being said in the white paper that creates it, what are being said by the founders. Platforms like ours do have to provide disclosure statements and risk acknowledgement forms to the individuals who are going to be trading in those. So really education and disclosure are key to address that perspective. And again, we're an evolving industry looking to get it right and as right as we can. And like I said, we're in a stage of evolution, but where we are focused on is disclosure and education for investors in making investments.
So if we're educating investors, how useful do you think this education is? Your principal investor, the namesake of your firm, so-called Mr. Wonderful, and after the fraud of SPF, he's out there publicly saying that he was one of the most brilliant traders in the crypto universe. He also built one of the most robust platforms. We used FTX actively, and then would you invest in him again? And he said yes. I mean, what education are we really bringing to bear with comments like that?
That's a very strong point. Mr. O'Leary's comments in that regard were his own with respect to his own investments, so I can't speak directly to that. But what I can say from a platform perspective is that I'm very happy that our regulators require us to put out disclosure statements that are prescribed, and we do everything we can to make sure that we're adhering to those guidelines on a real-time basis.
Thanks very much. Well, it would be helpful for both Mr. Garrison and Mr. Thomas. I mean, I would very much like to know, in your view and in your company's views, how you think we can better protect retail investors in this space. And so if you can follow up in writing at some point with some suggestions for what we might consider, I'd appreciate it. Thank you.
Thank you.
Would be pleased to.
Thank you very much to all and to our witnesses. This has been, I'll echo my colleagues, one of the most fascinating meeting of this committee we've had. Certainly for me, I take a keen interest in this subject, so I appreciate you taking the time, and this meeting is adjourned. Thanks to all.